Okay, so guys, I'm going to break down the Aussie dollar and the GBP JPY for everyone. I'm going to show you my short to medium term view and my long term view as well, and potential opportunities over the next few days. Okay, so it's important to note that we're currently floating around the key level. Okay, so we've got a current key level at 0.72250. If you want to note this down, you can. Okay, and we've also got a resistance here, and we've got a resistance here. So if I draw in the resistance, so we've got a resistance at this point here. You can see where we've currently began to drop to the downside, and we've also got a resistance here. Okay, and we have a support here. So we've got a support level here. So what I've done now is essentially given everyone the range that we're currently in. Okay, now what I'm going to do is go over to the daily time frame just to give you my overall bias to say. So we can see here, guys, since January, we've just been dropping all the way down until we reach this point here. And what I'm essentially looking for overall is a potential to bounce to the upside and see some very, very heavy bullish movement all the way to 0.7400 and possibly even beyond that. Okay, now I'm going to tell you exactly why that is in a minute, but that's just to give you guys the overall daily view. We are currently forming a upside down head and shoulders. I'm looking for the second shoulder to be formed at 0.7225. If it breaches that, then I'll essentially be looking for a bounce off a Fibonacci level, which I'll draw in now. So if we just get a simple Fibonacci, connect it from here to here, we can see that where we previously bounced, we previously bounced off here. So when you connect them from here to here, it's important to bear in mind that if you do have a strong retracement such as here, you'll shift it. Okay, so we're looking at 61.8 around here, guys, where we previously had some resistance. So if we do breach 0.725, which is here, then we could see a potential bounce for the euro dollar around this zone here. A bit different. So we could potentially see a bounce, guys, off this area here. And when we get that bounce off the 61.8%, what I'm going to be looking for is a breach of this resistance here and a run to this area here. You can see where we've got the 27% extension right close to this resistance area. So we will potentially wick off this area, and then we would essentially see another drop retest of this area as support, and then a breach, full-on breach to the upside, where I'm expecting the price to get to 0.7575. Now bear in mind, guys, this is the I don't know what's done that. Okay, so I am expecting the price to get to this area here, guys, at some point. Okay, however, I'll be first looking for that bounce off here. Now I would I'd agree with most of you to most of you would say, well, that is quite a big call, but I have done some really strong analysis, taken quite a bit of time on this analysis, and this is where I'm seeing it reaching at some point during 2018. Okay, but this is a long-term view, guys. If you wish to simply trade the shorter-term views, you can do that on the 4-hour time frame, where I've drawn out these here, and you could essentially take it from the bounce, when we get a bounce off here to this, could see another bounce after that to this previous resistance here. Okay, so we would see another bounce to this resistance area here. And you can see here, guys, where I'm simply taking into account historical price action data, completely objective, to map out where the price action could potentially go to next, okay? Now, the reason why I've drawn in this Fibonacci and I've labeled this area here as a potential bounce area is because if I draw in another simple trend line, connecting from here to the next swing low here, we could see that we're about to test this, this trend line here. However, because of the fact that we've got the Fibonacci retracement, which is so strong, I like to trade Fibonacci's more than the trend lines. I don't really use trend lines too much. However, I do know quite a few of you like trend lines, so I'm just going to apply it. So if you were to be looking to take a trade to the downside and you were the type of trader who trades trend line breaks, then you could wait for the break of the trend line to essentially get in on a short to this area here, where you'd then be looking to take some profits and waiting for a setup for a bullish bounce. We just adjust this resistance. You can see here after this bearish move here, we pulled back to retest the resistance area at this point here, guys, and now we're essentially headed for the downside. Now, there's something that I want to explain to you guys. A lot of you panic when you see the price action, you know, going up when you've got a short-term, medium-term bias to the downside. Now, it means nothing when the price action is essentially moving, you know, during the time frame of the candle. So to explain it simply, if we've got a 4-hour time frame which is active at the moment, okay, we don't essentially take into account that candle until it's fully closed. So by all means, this candle can go up a bit and then come crashing back down, leaving a wick behind it, closing as a nice bearish candle. So never panic, guys, when you see the price action going against your view, because it essentially doesn't mean anything, okay? So this bullish move here means nothing until the candle's closed, basically. And even if the candle closes as a bullish bar, it means nothing if it doesn't close as a bullish engulfing bar, okay? So the only time you would essentially start to think, okay, maybe it's bouncing off the 38.2 is if you get a bullish engulfing bar, okay? If we don't get the bullish engulfing bar, then you can see from this pattern that we've got here that we do have potential divergence, and we could very well see it pull back to this area and then bounce to the upside, okay? So the short-term / medium-term move for this pair, for me, is more bearish to the downside, okay? So if you guys want to take sells, that's totally up to you. I've got a strategy which I implement mechanically. So if I'm seeing a better opportunity on another pair, then I'm going to take the other pair rather than the Aussie, okay? So it's all up to you how you want to trade it, guys. I'm just giving you guys my view and my analysis of these pairs. However, the analysis for me is simply to just get a view. My strategy is most important, and the strategy is what enables me to be consistently profitable. Okay. So that's the Aussie dollar, guys. Does anyone have any questions before I move on to the GBP JPY? No, Ditesh, the chart, you know, the chart should be there for you to see. Can everyone see my chart? I just want to make sure everyone can see. Yeah. So yeah, Ditesh, it might be just something wrong with your internet connection. So any questions on the Aussie? Does anyone want to know anything about the Aussie before I move on to the GBP JPY? Okay, so let's move on then. So last week, guys, I did a webinar and I put out a video of my bias for GBP/JPY and where I see it potentially going. Okay, I did say that we've got some bearish movement to go before we see it reverse to the upside, and I still hold by that bias, and I'll explain exactly why right now. So we can see on Friday, guys, we had this huge bearish engulfing bar which took out the previous 2 days candles. Okay, however, at the moment we're seeing some bullish movement to the upside, and for me, that's simply just to confuse people. The market always likes to shake the majority out of their positions because the majority don't actually have any set strategies and don't really trust in any analytical process because they're not consistent with their analysis in the first place. Okay, so for me, I'm still seeing a potential for this pair to drop to the downside, and the reason being, if I once again go to the weekly, I'll just do the exact same thing which I did last week. Remember, guys, you never change your bias. So all you do is continue with the same bias that you left off with from last week. You can see here, guys, that we have this huge pin bar, this huge weekly pin bar off the 61.8% fib at the moment. Now, it's important to note, and I've said this before, that a pin bar is simply a candlestick where the body is small relative to the size of the wick. So the wick should essentially, and this is an important rule, the wick should be at least double the size of the body for it to count as a pin bar. Okay, so if we simply measure the body here, we've got 74 pip body and we've got a 250 pip wick. So therefore it's way more than double the size of the body here. So this counts as a pin bar, meaning that we will see some sort of pullback because we are at a previous resistance area and we form this pin bar off the previous resistance. Now, if I drop down to the daily time frame, I can show you which previous resistance area that was. It was this area here. Excuse me. If I drop down to the 4-hour time frame now, which is my favorite time frame to trade, simply draw in the resistance area. We can see where we first attempted to breach it, guys, followed by a bearish engulfing bar, which I did call last week. If everyone that was in this webinar and everyone that's watched the videos, they would know that this bearish engulfing bar was called. And now we're simply within this resistance area and, you know, simply looking for a strong area of resistance to bounce off, guys. We formed a lower low here from this previous low, where we also had this divergence pattern followed by strong bullish movement, simply to take out all the stops before reversing. And this is simply what we're doing at the moment. If many of you have traded GBP/JPY in the past, you would know that GBP/JPY is quite erratic in the short term and does like to hunt for stops before releasing the intended direction, so to say. Okay. So where do I see GBP/JPY retracing to? Well, we've got this resistance area here, support area, sorry, previous resistance, now needs to be tested as support. So I'll make that green for everyone to differentiate between them. So we've essentially got this range here, which is a 285 pip range at the moment. Now we've got multiple trend lines to draw in on the GBP/JPY. Now, essentially, when you're drawing in trend lines, you need to take into account that there's 3 types of trend lines. There's the inner trend line, there's the mid trend line, and there's the outer trend line. Okay, so these 3 trend lines are not sort of visible on all charts. However, when they are visible, it's important to place them properly. So first, we've got the outer trend line here, where we connect wick to wick. I have done a tutorial on this before, guys. If you don't know how to draw in your trend lines properly, please refer to that free webinar, which I've given you guys the link for in the free channel. We've got the mid trend line, which is simply connecting this wick to this wick there, and then expanding it out into the future. And we've also got an inner trend line over here, which has now been broken and retested. So you can see here, we broke it, we retested it, and we're currently out of the trend line. So the fact that we've broken this trend line, guys, means that we have a high probability of at some point reversing and dropping to test this mid-trend line here. However, because I like to take into account price action first and foremost, I am seeing a potential divergence to pull back all the way to 145.75. And that's only if we do get this break of the trend line, which I am expecting anyway. So we bounced off this area here. If I just put out my EMAs, we can see we actually bounced off the 50 MA here. And, moving averages are currently crossed over. However, the only way that this bias would change is if we essentially breach this resistance area, which I don't see happening at the moment, guys. I am seeing a bigger term or a stronger retracement occurring on this pair. If I get another Fibonacci, expand it from there to there, you can see where the 61.8% lies within this support area here. So this, to me, adds extra weight to the fact that we could pull back to this area, because this is a previous logical support area, and we've got the 61.8% lining up nicely with this area here, where we could see it just simply wick off it and then push back to the upside. If we do continue to the downside, then we would essentially see this formation occurring. We have the one bounce here. We have the two bounce here. And we could essentially see that third bounce occur at this point here. So you'd see we would essentially have to wick just below this support area here. However, if we do close above it, that means that we are respecting this outer trend line, and we will see that climb to the upside. The reason why I'm seeing a potential upside overall is because the fact that we have breached this previous high, although we haven't essentially fully broken it because we came crashing back down due to this bearish engulfing bar, we have printed a higher high. Now, if you have experience in the markets and you know what you're looking at, then this still counts as a higher high, even though that we didn't actually close above this previous high. Okay, the fact that we printed a wick beyond this high here still counts as a higher high. Okay, so it's important to note that down, guys. So I'm dropping you guys some gems in this webinar. We have about 8 minutes left, guys, and I'm going to end it and carry on with the mastermind group. I'm simply going to finish my bias for GBP/JPY. So looking for resistance, looking for sell signals to this area here, guys, around 145.31. However, I'll be looking to take my profits at 145.75. Okay, if I do get a bearish signal. Now, it's important to note, once again, I'm going to repeat myself because I want you guys to understand this clearly. When I have a bias for a potential pair, I'm not only going off my bias, I'm going off mainly my strategy. Okay, so my strategy has entry signals that I'm looking for, certain formations, certain patterns, certain setups that I'm looking for in order to take a sell trade. I don't just get in because I have this bias. So just because I've said my bias is to the downside for the short to medium term does not mean that you sell right now. You know, I'm waiting for an entry signal. Okay, and that's in the form of certain formations, certain things to line up on my charts as per my strategy, which is very, very detailed, that I've done for myself through hours and hours and hours of backtesting. Okay, so analysis, when I provide an analysis, that's me being an analyst. However, when I'm going to trade a pair or making a decision to trade a pair, then I refer to my detailed strategy, which has my setup rules, my entry rules, my exit rules, and my risk management rules all laid out for me, so I don't have to think about it. I can essentially just act off it mechanically with no emotion and no overthinking and no paralysis from analysis. Okay, well, paralysis from over analysis. Okay, because when I analyze a chart, we can easily have conflicting information. However, if I refer to my strategy and my strategy says to enter the trade, then I don't think about it anymore. I have to enter the trade. Okay, because I have to be consistent. You have to be consistent with whatever you're doing. It's the only way to be consistently profitable. And that's why investors trust me with their money, because they know that I'll manage it as per my risk management rules in my strategy, and my strategy is mechanical. So basically it takes out natural human tendencies. Hope that makes sense. So let me just check the chat. Okay, does anyone have any questions about GBP/JPY? Any questions about anything? Now, guys, I highly recommend that when you've drawn out your analysis and things like that, you know, to lock it in place, because as you can see, especially when you're using a Mac, it's very easy to move things around by accident when you're trying to navigate through the chart. So because I'm just demonstrating to you guys, I haven't actually locked it in, but you know, I highly recommend that you guys lock in your analysis once you've done it, or just take a screenshot so you remember where everything is. Okay, so once we achieve that bounce on the 4-hour time frame, that pull back to here and bounce, I will be looking at the next target, which is currently $150. So we're right smack on 150 here, although it says 150.05. You know, you should know that the 0 levels are psychological levels where a majority like to take profit, where institutions like to take profit or reverse the price action for a short period of time. So it would be logical to target 150, or you could just target this 71% Fibonacci at 119.81. Okay. So now if we do breach 78.6, which is here, if I do get a breach of this area here, then essentially this overall downtrend has ended and we would see it continue to the upside. However, if we do hold at the 71%, or even if we do breach it slightly and hold below this area here, forming a reversal pattern, then we could see it come crashing back down. Okay. So I've just demonstrated to you guys multiple forms of analysis, and you can take this away and apply it to your own analysis. Hope it was helpful for you guys. You have a few more minutes if you want to ask any questions before I end the meeting. So ask away if you wish. Has everyone benefited from this? Is everyone happy with what I've showed them? Come on, guys, we've got quite a few people in here. That's great, Jay. Excellent. Now, once again, this is my analysis. This is my bias. What I'm doing now is waiting for an entry signal, which aligns with my strategy. So I've stopped the recording, guys. What I'll do is I'll unmute everyone, because I know a few of you have mics and probably can't be bothered to write in the chat. So got quite a few people with their mics, so you guys can ask away if you want, or I'll just end the meeting. So no questions? Okay, guys, I hope you've enjoyed it. If you have any questions, send me a message on Telegram at any time, and I'll get back to you as soon as I can. Usually within a few hours, I get back to everyone, so you won't be waiting too long. So have a good, enjoy the rest of your day, guys, and I'll see you next time.